Sharp sell-off on Wall Street as President Donald Trump refused to rule out the possibility of a recession. The Dow tumbles nearly 900 points. Nasdaq slumps 4%, suffering its worst day since 2022, while Treasury yields also dip. Markets in Asia opened lower, tracking losses in the US amid tariff concerns and economic uncertainty. Nikkei falls 2% after Q4 GDP comes in below estimates. The GIFT Nifty is also indicating a cap-down start for the Indian market. Crude prices ease further. Brent crude trades at $68 a barrel as worries that US tariff on Canada, Mexico and China would slow economies around the world and hurt energy demand. Gold prices also dip on profit-taking ahead of US inflation. The Maharashtra government fails to deliver on its promise of increasing monthly allowance for women to 2,100 rupees. State budget allocates 10,000 crores less for a scheme and maintains the current 1,500 rupees allowance. The budget also proposes a third airport for Mumbai, increases taxes on CNG vehicles, luxury cars and electric vehicles above 30 lakh rupees. Hello, good morning. You've tuned into CNBC TV 18. I'm Vinny Motiwala and you're watching Power Breakfast. Thank you so much for tuning in. But a quick look at the Asian markets, because the handover from the US market hasn't been that great. Asian markets have opened up in the red, all of them, whether you're looking at Taiwan Index, Hang Seng, or even the Nikkei, Shanghai, ASX 200. None of them are trading in the green. So all of them are down more than 1% to 2% and above the 2% mark as well. Keep an eye out on the Asian markets. Nifty implied open, GIFT Nifty, what is that suggesting? That's indicating a lower start, a cap-down start for the Indian markets is what we're watching out for. Right now, it's 131 points down. It was down 200 points at one point of time, so that at least from the 200 points, it's come up, but still a gap-down start is what we're watching out for in the Indian markets as well. Not much of an excitement, concerns coming in on the Trump tariffs. So yes, keep an eye out on the Indian markets as well. We're expecting red on this one in today's trading session. And like I was saying, US markets, most of the stocks ended sharply lower, and this was why? Because investors reacted to the recession fears, tariff concerns. Those were the major things that was impacting the market. The S&P as well as the S&P 500 and the Dow Jones were falling nearly 2%, while the tech-heavy Nasdaq witnessed a 4% cut. Let's go across to CNBC's Bertha Coombs, who's here to give us a wrap and all the action that happened in the US markets. Bertha.
U.S. markets down sharply across the major indexes in Monday trade, with investors fearing an economic slowdown after President Trump this weekend refused to rule out the possibility of a recession brought on by tariffs. The Dow tumbling nearly 900 points, the S&P 500 falling over 150 points, while the tech-heavy Nasdaq shed 728. A big part of the tech sell-off, the so-called Magnificent Seven stocks, which include Microsoft, Nvidia, Apple, Alphabet, Amazon, Meta, and Tesla. Combined, they lost about $800 billion in market value in just Monday's session. Tesla was the biggest decliner of the group, down over 15% for its worst day since 2020. Tesla, on its own, has erased nearly $800 billion of market value since its record high close on December 17th. Meantime, CVS announced that it is downsizing some of its locations to smaller footprints that will only have a pharmacy. The chain said the mini stores will have a full-service pharmacy and will stock some over-the-counter items such as first aid, as well as pain and cough medications. CVS says it will open about a dozen of these stores this year as part of its plan to turn around the company amid competition struggles. That's what's happening here in the U.S. Back over to you in Mumbai.
Thanks for that. And amid the recession fears surfacing and hurting the Wall Street, let's listen in to what the U.S. National Economic Council Director Kevin Hassett has to say in terms for the economy and the outlook there.
Near term, we've got a Biden economy that, still most of Biden policies are in place. If you look at the Atlanta Fed GDP now number, it's showing negative first quarter, which is kind of, if you like, a metric of the inheritance of President Biden. A lot of that is also from a big increase in the trade deficit, which, as you know and you've been covering, Joe, is happening in part because people are anxious about future tariffs, and so they're stockpiling. And so that's a very, very temporary phenomenon. I think that medium term, what you're seeing is the biggest tax cuts in history, a massive deregulation, a productivity boom from artificial intelligence, and tariffs, which even if you take the high-end estimates of the tariff revenue, they're going to be just a tiny fraction of the size of the tax cuts, which are almost surely going to be in place by the summer. So if you're thinking about what's going to happen to capital formation in the U.S., if you take our cost of capital measures, it goes up 10, 11% over the next year. There are a lot of reasons to be extremely bullish about the economy going forward. But for sure, this quarter, there are some blips in the data, including the negative GDP Dow, which are related both to the Biden inheritance and to some, timing effects that are happening ahead of tariffs.
Also, let's bring in some views and opinions coming in from the market experts on the sharp decline in the Wall Street indices and what's the way forward.
Risks of our bear case have risen, and sort of embedded in the idea of our base case was a 5 to 10% drawdown. So we thought the market would end the year at 6,600, but have a 5 to 10% drawback during the course of the year that it would bounce back from. I do think the risks now are rising that we get something worse than a 10% drawdown, something say in the 14 to 20% range. We haven't pivoted to that, but I do think it's an important distinction because you're starting to see, other houses, frankly, start talking about the risks of a recession are rising. And I think it's important to remember in equity markets, sometimes we have something in between just garden variety pullback and recession pricing. A recession is worth about a quarter to a third of a drawdown in the market. From GFC to COVID, we had a
great financial crisis.
Yeah, the financial crisis. We had a number of these 15 to 20% drawdowns, which were growth scares. So fears of a systemic issue, the U.S. debt downgrade, sovereign debt crisis, the 15-16, kind of mini recession hit the industrial sector, not the consumer, and then sort of the debacle of 2018. And so I'm worried about that kind of scenario manifesting in markets. We've broken below average. 2015 through 2019, average tended to be the bottom. Recessions are about 11 to 13, so you're actually not that far off from recession pricing in small caps. The broader markets have got a little bit more work to do. S&P X top 10 is trading around 17 times. The average is more like 15, so we need to break a bit more than that. But things are starting to I wouldn't say problems are getting fixed, but froth has come out of AAII on the retail investor survey. We're getting some froth out of these valuation metrics. Even the top 10 market cap names in the S&P are trading around 14 times, or 24 times. That's down from 30.
Well, inflation was on a pretty good path. There was disinflation in place. Prices were coming down, not quite at the Fed's 2% target, but getting there. We're going to get some inflation data this week. It won't matter in the least. The market's going to look right through it because right now the market's concerned about the impact of tariffs. How much is it going to take off of growth? What does that do to the probability of recession? And right now the market's pricing in a higher probability of recession and not so much the reset in prices from tariffs.
Okay, let's get to the final update in our global market wrap this morning. Markets in Europe also ended down in Monday's trading session. Whether you look at the French CSE, that shed almost 73 points. The DAX also closed lower by around 390 points. And the FTSE that ended lower by 80 points. Pan-European stock 600 also lost 1.4% in the trading session yesterday. So this fall came in even for the European markets. So nothing exciting in terms of a coming in for that. But how is all this going to be impacting our Indian markets? To set you up for today's trading session, important stocks to watch out for in today's trading session, we have a team of research, as always, who's standing by to set you up for trade. Hurmas, let me start up with you. Good morning. Doesn't seem like a good morning that we're going to be seeing coming in today for the markets. Gap down is what Nifty implied is indicating.
Good morning, Vinny. And if I had to take some positives for the sake of it, I could say that there has been some recovery in the gift Nifty. At one point was down almost 220 points, currently down 130, but a gap down nonetheless. So it'll be testing some very key levels on the downside. And some triggers were evident from yesterday's session itself because we ended at the lowest point of the day. At one point, we were about to test 22,700, faced resistance at that level, and then sold off towards the close of the trading session. And now now this question is, will the index be able to survive the sell-off that we saw on Wall Street overnight? Even there, the benchmark indices have broken below some key averages, so not good triggers coming in from Wall Street as well. And it was, the pain was reflective in the broader markets all through the trading session actually. Even though the Nifty sold off in the later part of the trading session, the mid-cap and the small-cap indices were in the red through and through, and they were the underperformers yesterday. It was only the FMCG index that was the only sectoral gainer in yesterday's trading session. It remains to be seen whether we find one today at all. Now, the important levels, of course, it is 22,250 based on what the Gift Nifty is indicating. At one point was down 200, so was indicating a start close to that 22,250 mark. And if that gets taken out, then of course we get a retest back down to 22,000 on the downside. And it is important that we sustain above that 22,450 mark, which we have closed very precariously at in yesterday's trading session for further upside. Now, the question to be asked, of course, is have we begun a dash back towards last week's low of 21,964? Will FIs continue to sell aggressively now? But if considering the sell-off in the US markets, will some flows move back to EMs? That remains to be seen. And of course, all eyes on the CPI and the WPI data that comes out from both India and the US later this week. There's volatility seen in the Dow futures as well, and of course the 25% aluminum and steel tariffs that kick in by tomorrow. So important triggers to watch. For now, a gap down in the offing.
Okay, thanks so much for that, Hormaz. But let's go across to Abhishek, who's here to tell us the important stocks to watch out for in today's trading session. Good morning, Abhishek.
While IndusInd Bank could be in another red for trading session today, given the fact that the bank has disclosed that they did an internal review of processes with respect to other assets and other liabilities accounts of the derivative portfolio. So they estimate an impact of 2.35% adverse impact on the bank's net worth, which was there as of December 24. Gensol Engineering, the promoters have infused 29 crore via conversion of warrants. They converted warrants around 871 per share. Now, Indico Remedies, their Hyderabad-based clinical research has got one Form 483 from US FDA. Anupam Rasayan, they have signed a 10-year letter of intent worth about 922 crore with a Korean MNC. HEG over there, Bilwara Energy approves a fundraise of up to 500 crores. A board has also approved modified composite scheme of arrangement of company, that is HEG Graphite as well as Bilwara Energy. Now, Asia Infra, they have reappointed their managing director with a effect from April 1st. Syngene acquires its first biologicals site in the USA, and Hitachi has launched a QIP of up to rupees 3,000 crores. Back to you.
Thanks for that, Abhishek. Keep an eye out on all the stocks. But what is the world of FNO going to look like today? We have Sudarshan, who's here to tell us all about that. Good morning, Sudarshan.
Good morning, Vinny. So first, it's all about global cues, where we are getting very weak global cues from US market, where we saw Nasdaq closing with a cut of more than 4%. But as far as FNO data is concerned, it's not looking that weak. Now, talking about yesterday's session, we saw Sensex and Nifty closing with minor cuts, while mid-cap index saw a cut of more than 1%. And as far as Gift Nifty is concerned, it's indicating a start with cuts of more than 100 points. Now, talking about the flows, FIs continue to remain on the sell side, but the sell numbers have been coming down every day. Yesterday, they have sold nearly rupees 300 crore in the cash market, while DIs have bought more than rupees 260 crore. On the derivative side, FI's sell figure was more than rupees 500 crore. They have reduced long positions by nearly 440 contracts. At the same time, they have added short positions of more than 2,880 contracts. Now, FI's long exposure reduced. It has come down below 17%. It's at 16.7%. On the call side, strike rates that were active was first 22,700, where we saw addition of nearly 59 lakh shares, and for 23,000 call, we saw addition of almost 43 lakh shares. Now, on the put side, 22,300 put has shed 23 lakh shares, and 22,450 put has added almost 4 lakh shares. So what it tells you that on the downside, support remains around 22,300 for Nifty for now, and resistance is now at 22,700. If Nifty fails to hold to the levels around 22,300, then the level that comes in the picture is 22,100. Stocks that are in band, first one is BSE, then Hind Copper and Manappuram Finance. So these three stocks are in the band.
Okay, Sudarshan, thank you so much for the update there. Keep an eye out on the support and resistance level, as well as three stocks in the world of FNO that are in the banned list as well. But yes, that's the update on the FNO front as well as the domestic front. And we're going to slip into a very short break here. But a quick programming alert coming in for you all. One of the biggest bulls on the India story, Morgan Stanley's India equity strategy rhythm. Desai, our market editor for the day, will join us today at 10 a.m. to discuss why he feels India's and Indian fundamentals are improving and the market may be at a turning point. He will also be speaking to management of Shree Cement to understand the industry dynamics, and a little later we will be joined by the management of Cholamandalam to discuss how RBI measures should help NBFCs. Stay tuned in for our market editor special 10 a.m. onwards. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. But IndusInd Bank is expected to be in focus today as well, maybe a bit of a decline. Abhishek is here to give us more details on this one. Abhishek, good morning, and take us through those details for IndusInd Bank.
Well, Vinny, IndusInd Bank could hit another 52-week low in trade today, given the fact that they have given a statement out with respect to exchanges. Their internal review of processes with respect to asset and other liability accounts of derivative portfolio has seen some mishap over there. So about 2.35% of net worth to get adversely impacted, which as per calculation post-tax could be around 1,580 crore and pre-tax could be around rupees 2,100 crores. So they have appointed external agency to review and validate the internal findings. The bank's profitability and CRAR, that is capital adequacy ratio, remains healthy to absorb this one-time impact. The management did held, an analyst call over there wherein they mentioned that the practice has been ongoing for 5 to 7 years now and was discovered as part of a review initiated following new RBI guidelines with effect from 1st of April 2024. Also, CEO's 1 year extension versus the 3 years that they sought has been acknowledged to be influenced by this issue. So analysts do say that one-time earnings impact is seen but can lead to short-term de-rating of the valuation of IndusInd Bank. So many of them have cut earning estimates anywhere between 20 to 25%. So we have MK, Jeffries as well as Citi who have actually cut the target price on the stock. In fact, MK has downgraded the rating to add from buy on IndusInd Bank. Back to you.
Okay, Abhishek, thank you so much for that. Surely keeping an eye out on IndusInd Bank in today's trading session as well. But on that note, let's just slip into a break, and next we get to what's happening in the world of commodities. So stay tuned in for that. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Let's move on. The Maharashtra Deputy Chief Minister Ajit Pawar tabled the state's 7.2 lakh crore rupees budget last evening. Over 35,000 crore rupees has been allocated to Ladki Behan scheme. However, the Mahayuti government failed to increase the monthly stipend to 2,100 rupees. Chief Minister Devendra Fadnavis said that the payout will be hiked once the fiscal balance is achieved. The government has additionally proposed a third airport in Mumbai near the Vandavan airport, and this is expected to be completed by 2030. To boost the state coffers, the Mahayuti has proposed to hike taxes on LPG, CNG vehicles by 1%, while electric vehicles over 30 lakh rupees will be taxed at 6%. Despite the strain on its kitty due to the pre-election welfare scheme, the Mahayuti has pegged FY26 fiscal deficit under 3% of the GSDP. Okay, that is our update coming in from the state of Maharashtra. But let's move on and get you the update that's happening in the world of commodities. Manisha is here this morning to tell us what's happening there. Manisha, red across the screen in the equity markets, but anything that could be exciting on the commodities front?
Well, no, I can't say that because that's exactly what we are looking at in sense of commodities as well. Sharply down overnight on tariff impact concerns, the kind of sell-off that we've seen in the global equity markets and the weak economic data. Everything continues to weigh onto the commodity markets, where you've seen even the precious metal prices decline. So gold fell 1%, silver fell 1.5% in the overnight markets. Crude is down yet another 2% overnight. Crude has been declining for the last 7 weeks now, and this week does not seem any different. Weak demand concerns, ample supplies, economic growth concerns due to U.S. tariffs on Canada, China, Mexico, and this whole conversation about reciprocal tariffs is weighing onto the markets. China also has seen its producer and consumer prices fall more than expected for the month of Feb. So not just the crude oil prices, but the base metals, which were doing quite well in the previous week, also has come under selling pressure this week. So when you look at copper, we've seen 1.5% of decline overnight. Iron ore prices are trading at a 2-month lows. Steel is trading at 1-month lows right now. And that impact also can be seen in copper, which fell 1.5% overnight. Rubber prices are trading at a 1-month lows. So, well, absolutely, there is no place to hide, and there's a very sharp decline across commodities also.
Okay, Manisha, thank you so much for that. And, commodities also not showing that much of a pretty picture. But Nifty implied open, we'll quickly take a look at that. At one point of time, it had recovered from the 200-point decline to 100-point. Now it's 87 points. So some bit of a recovery, at least in the Nifty implied open, is what is indicated, though still down 87 points. But that's where we'll be ending the show. Thank you so much for tuning into Power Breakfast. Up next, your Pass On Morning Call.